Coming up today, stocks close flat, made in America making a comeback. Will Bitcoin hit 500,000? The latest on inflation, NVDA gets into nuclear, and the big structural changes coming for the United States of America. It's a new beginning, guys. Let's go. And welcome back to the Daily Market Review, everybody. S&P 500 having another quiet day here, just below 6,000, with a bit of a rotation today with the growth sectors still holding up the best ever since the election. Discretionary stocks, financials, small caps, and a bit of a bounce back in energy shares. Down the bottom, all the defensives, utilities, staples, and healthcare stocks underperforming since last Tuesday. And stick with me today because I'll share with you later on a few swing trading ideas I'm currently looking at, along with updates on all the hottest stocks out there: crypto, AI, nuclear, quantum computing, space exploration, and I'll also give you an update on the China and cannabis trades as well. And hang around because I've also got a special announcement I want to share with you guys later on in this video. Otherwise, let's dive right in to all the most important news and topics that are really driving financial markets of late. And so it looks like we're getting a complete red sweep. Republicans going to control the White House, Senate, and the lower house of Congress as well. We all look to be unified and getting behind the 47th president's political agenda of putting America first, incentivizing domestic production and looking to bring back manufacturing to the states and potentially making the states a leader in manufacturing, of course with the help of AI and robotics. As the United States doesn't have a labor cost advantage, it needs to have, and it currently does have, the technology advantage, which could indeed accelerate. And so this is a pretty big change, not only for the states, but the whole world. And whether we like it or not, it affects all of our portfolios. But what obviously has been doing the best ever since the election is it's really lit up the crypto market. And Bitcoin with an unrelenting rally, marching higher again today above $93,000 a coin. Just seems like there's nothing in its way. And we've got some of the biggest crypto influencers in the industry, like Galaxy Digital CEO Mike Novogratz. He's predicting Bitcoin might actually reach $500,000 a coin if it does get adopted as a national reserve asset in the States, which it looks like Laser Eyes Senator Cynthia Loomis is determined to get done. She thinks they can pass the strategic Bitcoin reserve bill in the first 100 days. This new admin is moving really quick on a number of key issues, and this could be another one of them. And there's a look at the digital gold. Looking at a little extended short term here, as it's been an absolute monster move. A little over a month, it's gone up 50%. And since we just got the formal announcement of the Department of Government Efficiency, Dogecoin with the same initials had a pretty big rally overnight as well, because why not? However, the miners had a bit of a sharp pullback today after we got earnings from Mara Holdings. Did come in a touch shy of estimates, with mixed reactions from Wall Street analysts. We did have a bit of a run-up going into it, so it looks like it was a bit of a sell the news event. And that spilled over to some others as well, like MicroStrategy, putting in a pretty big bearish engulfing candle here, as it too is pretty extended after its most recent earnings, which didn't meet expectations either, as they had a huge capex spend. Also affected other miners, Riot Platforms, and of course the biggest crypto exchange in the States, Coinbase, having a pretty sharp fall here today, down off 10%, even though Bitcoin's still holding up. What hasn't been doing well since the election is international stocks, responding negatively to the threat of potential tariffs, which are not just set to affect China, potentially the whole world, Europe, Canada, everybody. No country's insulated from these potential tariffs. And we can see that in the spread of the two ETFs, the Vanguard World Stock Fund, excluding US, versus the S&P 500, which again, the market already saw coming going into the election. Then after the election, this spread dropped huge, 3.5%, and is still diving even today. International stocks significantly underperforming American stocks this last month. I continue to believe one of the biggest risks to the market in the immediate term, which might actually play out in Q1 next year, is of course if we get a full-blown trade war, if China bites back in a hard way or does something else to upset the narrative. That's still yet to play out. However, according to research by Deutsche Bank, they've ranked the countries that are likely to be hardest hit by potential UF tariffs based on their economic reliance on US trade and potential scope of new levies, which they actually rank China in the middle of this graph here. Up the top, Mexico, Vietnam, and Canada expected to be hit the hardest. Countries with the green bar are those that have a free trade agreement with America. As the name suggests, free trade agreements are designed to be just that, free trade between two countries. Little if no tariffs or levies, import-export limits, intellectual property, so on and so forth. But the biggest news we've got overnight was the creation of a new department from the federal government, the Department of Government Efficiency, going to be headed up by Elon Musk and Vivek, two really sharp guys that are set to take the butcher's knife to bureaucracy, the size of the government spending, and waste, which this has big ripple effects everywhere, including financial markets, which we could see a bit of volatility volatility, as we don't know exactly what's going to get cut. A pullback in government spending can no doubt affect some sectors. However, overall, it should be a net benefit, loosen up regulation in all areas of the market. For example, biotech companies may get quicker approvals, and there may be a lot less pushback on other private sector initiatives. And I think overall, especially when you look back in history, typically when the government becomes smaller, private sector becomes bigger, and vice versa. A bigger government creates a smaller private sector, because just keep in mind, the government doesn't create wealth, it spends wealth. And so if the US federal government becomes a lot smaller, they'll obviously have to go into the private sector, and instead of spending wealth, they'll hopefully be working towards creating more wealth. But that's the big holistic picture. It's going to take some time to play out. They're set to run this new agency until no later than June 26. It's not going to be an ongoing thing. 47th president's just tasked them with getting in there, creating some real efficiency with how the government is run, which is actually really needed given the blown out federal debt, especially since 2020, which is almost about to reach 36 trillion. That equals $272,000 of debt per US taxpayer, not including their own debt, which, as we've been noting for a while here, is simply on an unsustainable path, which again has big knock-on effects to the value of the US dollar and global investors' confidence to invest in US treasuries and other capital markets. And so this is a whole new approach to running the United States government, kind of starting to run it like a business now, with some of the most powerful people up the top political outsiders, hence why they're hated by the establishment. Currently around 428 federal agencies exist today. Musk thinks 99 is more than enough. That'd be a huge reduction, kind of like what he did with X. Overtook it, got rid of 80% of the staff, and now usage is at an all-time high. And I can tell you from being on this platform since 2009, it's never run better. Could bring that same level of efficiency to the United States. One thing I think will really clean up the government, and something RFK's promised to do, is put an end to the revolving door between government and industry. Creates a lot of conflict of interest and just straight out corruption, in my opinion. However, the establishment's already pushing back. Elizabeth Warren mocking the Department of Government Efficiency, saying it's 2 people to do the work of 1 person. This seems really efficient. For which Vivek responded, the stuffed suits have no idea what's coming. And it's just amazing how quick things can change. For example, this woman here was jailed just a few years back for keeping her salon open during the COVID lockdown. Now she just won a seat in the Texas State House. Also good to see all actions of the new efficiency department we posted online for maximum transparency. However, as you can imagine, a lot of people and agencies altogether in the establishment must be feeling pretty threatened at this point of time. So there could be some pushback, some new controversies, and anything that significantly derails the incoming admin's plans could create some volatility in markets, since markets are trading on a high on the expectation a lot of stuff's going to be getting done. Deregulation, lower corporate tax rates, cutting a federal agency. And this isn't just about regulation and tax, it also affects inflation. It plays a huge role in financial markets. That's why we follow governments and politics, because they have the biggest influence in financial markets. They have the ability to intervene. And just like we've seen in Argentina, swift changes can give swift results. Javier Milei quickly creating a smaller government, cutting down regulations, handing the economy back to the entrepreneurs to drive and create wealth. And it's already working wonders. Ever since he took office in late last year, monthly inflation was running at 25%. And has pretty much come down every single month since. Latest reading, 2.7%. As he's chopped down the government to size, keep in mind this man is an economist. So we could be seeing the same sort of trimming of the fat in the United States of America, which could help keep a lid on inflation, since government spending is the biggest driver of inflation. So like I said, how quick things change. Just a few months ago, we had that moment where Biden was quite cheerful after a jury found the former president guilty. Thought it was all over, done and dusted then. And here we are today with him congratulating Trump, welcoming him back to the White House. And I think a big part of this has been a big change we've seen in media over the last year or two. How information is distributed and consumed, and that definitely played a role in the election. And viewership for mainstream media is currently falling off a cliff. So it's clear to see who has won the war on information, as CNN has fined hundreds of employees as their ratings tank, with them also losing some key anchors, jumping ship. And stick with me today, because a little bit later on, I'll talk about how this new incoming administration may actually surprise the market when it comes to cannabis. However, before that, just looking at this interesting chart here of real returns for US dollar-based assets by quarter century, 25 years. I think it would surprise a lot of people to know that the last quarter century is actually not the best. Since 2000, US stocks have only annualized 4.9%, well below the quarter century we got from 1975 to 1999, even below that of 1950 to 1974, along with 25 to 49. In fact, the last 25 years has been the second worst performing. And believe it or not, what's done better since the start of this new century has been gold. well ahead of the S&P 500. And what's really going to help stocks continue to rally and for this bull market to hold up and potentially go for many more years is if inflation doesn't materially climb back. If it just bumps around this current level, it should be fine. And who knows, potentially even could keep going lower. If we do indeed get a big pullback in government spending, along with the productivity and efficiency gains coming from AI, could be the most deflationary technology we've ever seen. We've got inflation numbers coming today, all as expected. Headline running at 2.6% annualized, core at 3.3%. Market seems totally fine with these numbers, and Fed members are still talking about cutting next month as well, which interest rate traders actually just increase their chances that they will cut come the 18th of December. 82% chance. That's good news for the equity market. However, the path of those cuts looks to have been pulled in a bit. Market currently pricing in a terminal rate 3.75, where the Fed may be done, which I would agree with as well. Maybe they do have 1, 2, 3 more cuts left, and as long as inflation doesn't materially uptick, they should be able to do that. And if the US economy is growing, everything else is good, no big surprises, they may be able to leave rates around the high 3s, 4%, for which the equity market should be totally fine with. And again, how quickly things change. Just a couple of months ago, if you were to look at this chart, you'd almost be convinced that this market is priced in a recession. They'll price it in so many cuts. However, ever since the Fed did cut, bond yields have done nothing but rip, with the 10-year going from 362 up to almost 450, almost up a full percent in a little under 2 months, helping to absolutely drive the dollar firmly high here on the same pattern ever since the Fed cut, with it still ripping up today, but approaching a key resistance zone around this 106.50 to 107 level. Also playing a big role in this bull market is the leading sector, which really kicked it all off, AI. We get to hear from NVDA this time next week on their latest earnings. Wall Street still very positive on the stock. One research firm are likening their Blackwell chip to an iPhone mode. It's a very big call. That's their next generation GPU chip, for which the world's biggest companies are trying to outbid each other to buy them all. Nvidia's got no problem selling whatever they make. They don't have a demand problem. They have a supply problem. And hopefully that tail risk with China doesn't play out. It has spilled over to other areas of the market, doing well of late. A company that NVIDIA has actually invested in, SoundHound AI, quickly becoming a leader in voice AI that can be used across many industries. Pretty sure in a few years, a lot of call centers, fast food drive-thrus, and other similar businesses will be talking to a voice AI. However, like a few hot stocks of late, it had a pretty sharp run up going into earnings. And even though they did beat on expectations pretty good, it was a bit of a sell the news event. Obviously, this stock is very volatile as it's not profitable yet. What's also very stretched in the short term, and it's just had an amazing run this year, Palantir, constantly coming out with news of new partnerships, with another one today, extending their partnership with one of the world's largest iron ore miners, Rio Tinto, as Rio becomes another one of the world's largest companies to integrate Palantir platforms throughout their businesses to help drive productivity and efficiency gains. And so Palantir already is, but will continue becoming one of the world's most important companies, closely integrated with the US government and big companies around the world. Remember, they were founded in response to 9/11 with a mission to support defense and intelligence institutions while protecting privacy and civil liberties. And so when you're good friends with the US government and you've got them as one of your biggest customers, that's a very reliable cash flow, and why this market is pricing them so far out into the future, trading at a huge premium, over 40 times sales. Market cap 138 billion, definitely getting a little stretched here in the short term. No doubt we should expect a pullback soon, but it's been an absolute rocket show ever since their last earnings, which they came through with another beat. Also good to see the current outgoing administration and the new incoming administration pro-nuclear energy. It's got bipartisan support. United States setting massive new targets for nuclear power, aiming to triple capacity by 2050. Framework emphasizes the deployment of advanced nuclear technology, including small modular reactors and microreactors, to provide reliable, carbon-free power. And we also heard news today of NVIDIA just making its first move into nuclear power, partnering with PG&E for the recently saved Diablo Canyon nuclear plant to build AI inside the plant. Once again, another big tech company making some inroads into this very important sector. And there's a look at the Global X Uranium ETF. Has been having a pullback the last few weeks. I think the market's not entirely sure how the new admin's going to approach this, as we have seen other areas of clean energy getting whacked hard this last month, and the expectation of regulatory and political tailwinds being rolled back, and instead those carrying over to fossil fuel industries. However, that could actually provide a further tailwind to nuclear, because it may be one of the very few areas of clean energy that the new admin really gets behind, because we've seen solar stocks come off, wind stocks come off, but some of these nuclear stocks that have been one of the hottest trades the last couple of months still holding up really well. SMR continuing its march higher today, along with other similar stocks. Nano Nuclear still holding up, along with Sam Altman backed Oklo still holding its uptrend as well. Now moving on to the cannabis sector, definitely in play this week. absolutely smashed since the election, especially after the Florida cannabis ballot fell through. However, I'd agree with this article on Morningstar today that argued the market has overreacted to its long-term impact. And in fact, they're not changing their fair value estimates on the Canadian licensed producers nor the multi-state operators in the US. And so fundamentally, let's just take a step back and look at the people in power now and some of the things they've said on this topic in the past. The incoming 47th president, I believe it is time to end needless arrests and incarcerations of adults for small amounts of marijuana for personal use. We must also implement smart regulations, safe tested products. He said he actually voted yes on Florida's Amendment 3. He wants to continue research to unlock the medical uses, and I'm pretty sure he wants to get this done as the current admin hasn't been able to. And like I said, that's his mandate. Do all the things this current admin couldn't have done. RFK said he wants to decriminalize cannabis at the federal level. So the current situation is absurd. Vivek, it's a joke that cannabis is not legal. Matt Gaetz, who just got the role of as Attorney General in the new government. Federal government should not deem marijuana illegal. He's been believing this for a few years. And also now one of the most important people at the top of the US government, Elon Musk. Selling weed literally went from major felony to essential business, open during the pandemic in much of America, and yet many are still in prison. Doesn't make sense, isn't right. This is just one of many things he's said in support of the industry. And keep in mind, he's a cannabis user himself. A couple of years back on the Joe Rogan podcast, was smoking weed, for which he got in a lot of trouble with the suits. Of course, they didn't mind him drinking whiskey. However, like I said, the world's changing. It's the only thing that's constant. And so I continue to believe it's just a matter of time before the right thing is done. And although I've been disappointed with the current admin and was let down on their promise, I have a lot more faith in the incoming administration to get this done. And like I said, it may happen sooner than what we think. And in fact, we may have already seen a bottom in the cannabis sector yesterday morning, for which I'm monitoring a number of securities that I'm looking to enter in the coming days. Start a position, continue to enter on pullbacks, and hold faith that what most Americans want done will eventually get done. And who knows, potentially in the first half of next year. And moving on to another sector I monitor, China shares, still just stumbling around here. I think we're going to see a bit of volatility for a few months. Market hates uncertainty. We don't know what the tariffs are going to be, nor their effects. I think the Chinese are waiting for that as well to counteract it with more stimulus. It will be interesting to see Alibaba's earnings come Friday. They've been buying back a lot of stock. Valuation, still crazy cheap. They just opened up Stock Connect, allowing Chinese mainland investors to invest in Baba via Hong Kong. I've got a feeling they may surprise in the upside, and we may just see a big fat green candle for Alibaba come this Friday. It could be the same deal for other large Chinese internet retailer JD.com. They're reporting tomorrow, and we may get Alibaba moving in sympathy with that as well. And I continued to buy the dip on Up FinTech Holdings today, adding to my long-term position in TIGR Brokers. It's amazing they've traded down after a blowout earnings. They beat expectations by 106%. Latest quarter revenue growth, 44% year over year. Those are monster numbers, and the market is simply not rewarding them for now. But I'm starting to trade on their platform, and I'm continuing to like what I see. There's so much good data and analytics. And like I said, I run 6 different portfolios across 6 different brokers, and I think I can comfortably say now, this one is the most sophisticated and advanced out of all of them. And of course, I'm biased as a shareholder, but I truly do believe that. For example, here, they can group stocks by concept and just the depth of data they've got across all types of markets, easily able to categorize stocks according to whatever you want. And like I said, not just US stocks either. Australian, Hong Kong, London, Singapore, and Chinese stocks on the mainland. They give investors all around the world a window into the Chinese market, and these guys are headed up in Singapore. They've got a really good news section, community, and like I said, the TIGR GPT is a really handy tool to be able to talk to it and learn more about the market or a particular stock or asset and what's going on. So in my honest opinion, it's a cutting edge platform, really well positioned in the Southeast Asian markets, offering a two-way bridge for local and international investors. And so I'm being honest when I say, I hope I get a chance to buy more shares in the falls over the coming days, which I will be certainly doing if it were to trade down there. Another area that could be shaping up for a swing trade at least, energy, crude oil, which like I said, it's got the tailwind of a pro-fossil fuel incoming government, got crude oil just sitting a bit above this key support zone, $68 a barrel. And we just got earnings out from Warren Buffett's favorite, Occidental Petroleum, Oxy, which put in a massive hammer formation today. Traded down off the open, but big money came in there and scooped up those shares, finished the day a bit higher, and I can see why. They actually had a pretty good quarter. CEO said strong operational performance across all segments has resulted in our highest quarterly operating cash flow this year. And they did come through with a pretty significant beat against Wall Street analysts' expectations as well. Nice big bullish divergence on my DSI here. May not only be shaping up for a good swing trade, but potentially a position trade for exposure to the energy and oil sector, at least as a hedge. And like I told you guys a week and a half ago, when I was looking at Marathon Petroleum for a swing trade, my indicators were firing off. That's quickly reverted back to the 50-day VWAP, just like the other one I mentioned back then. Phillips 66 has done the same as well. A nice quick clean swing trade there. And now with the pullback in gold, I'm starting to watch a few names in this area for potential swing trade. Still could have a little further to go on gold futures here. Not quite in the lower buy-sell band. Definitely oversold in the DSI. Do got some bullish seasonality on all time frames. And so I'm looking at the junior gold miners ETF. My third reversal signal just firing off. Still a little bit above the support box. I'm potentially looking for a swing trade on any dips down there. Along with one of the biggest gold miners out there, Barrick Gold. Ticker symbol gold. It too approaching this key support zone. Maybe setting up for a swing trade and see we're 14% below the 50-day VWAP. It too has a bit of bullish seasonality over the next couple of weeks, month or two. Another area of the market's been on fire lately, space exploration and servicing companies. Rocket Lab rocketing up yesterday on their earnings, 28%, finished higher today, even though they actually missed estimates, which helped my space stock I'm invested in, Intuitive Machines. Trade up strongly in sympathy, up 13%. We get to hear earnings from them tomorrow, and we may get a case of these other stocks that have run up hard into earnings and we actually pull back regardless of the result. Otherwise, that's waking up a few other space stocks. AST Space Mobile and even the Left 4 Dead Virgin Galactic been catching a bid this week. Another area of the market continuing to rip, quantum computing. IonQ, another monster day. Along with a huge day for quantum computing. Really small stock, just happens to be in the right sector at this point in time. D-Wave Quantum up another 15% today. And Rigetti Computing, similar technical pattern to these space and nuclear stocks. Some of these really high growth areas, a lot of volume coming in, a lot of momentum. The market's definitely trading on a small cap growth theme at this point in time, which could continue throughout this bullish seasonal period into the new year. And finally, just looking at the volatility index, still getting a bit of a crush here. Did get down to a 13 handle at one point today, and I expect it to get down into the 12s by the end of this month. Who knows, potentially in the coming days, unless we get any new surprises. And like I said at the start of this video, I had a special announcement to make to you guys today. I'm really excited to announce the launch of a new service next Thursday. And so with the help of AI, I've designed this new service based on the results from the survey I conducted with you guys a few weeks ago. It was really clear what you're looking for, what your challenges are. And so I think I've come up with something that's really going to appeal to a lot of you. And as far as I can see, no one else has done this before. And this is likely to be the last product launch I do for Click Capital. So I'm super excited to share more details with you guys over the coming days. So make sure you stay tuned in for this. Otherwise, that's a wrap for the daily market review today, guys. And I look forward to breaking it all down for you again this time tomorrow. Cheers.